everyone. I'm not sure if Nat's joining us, actually, but if he does, he'll probably pop up. Anyway, good morning, everyone. Welcome to the AIBC. I'm excited to be back here again. As Wes said, today's panel is entitled When Smart Money. So before we do, let's do introductions and also a little bit of a definition about what you think smart money is. Jingwei.
Hey guys, it's Jingwei here. I'm part of the venture capital team at Fidelity Ventures. So Fidelity is the second largest asset managers globally. We manage around 11 trillions of clients' assets. So what we do as a fund is that we deploy capital into Series ABC companies, write check 5 to 50 million into fintech and Web3 startups across the globe.
Hi everyone, thank you for having me today. My name is Nilsson. I go by Crypto Megan. And I am a high-end portfolio consultant for NFTs and crypto, and also helping bridge Web2 companies to Web3, so celebrities, investors, companies, brands. And right now I'm on a world speaking tour to advocate for women and to help educate newcomers, because in light of the current situations, I think that's now more important than ever. So thank you for having me.
Hi everyone, my name is Eilon from Coinpoint, and we are a blockchain solution agency, basically advocating for the integration of blockchain with the entire space, currently focused on bringing businesses into the metaverse and Web3 technology. And this panel is obviously very relevant, as we are going to discuss the implication of smart money that is coming in, and obviously, as you will soon find out, so Web3 and the metaverse is the future, and obviously we will know that the money will flow there. So,
Nat, welcome.
Hey everybody. Hey, nice to see you. A little bit late to the stage there, but my name's Nat Cole, and I work with two different projects at the moment. The NFT Clothing Club, which is an NFT project which is bringing more attention and focus to Bitcoin. And also I work with the Stacks blockchain, representing them in London, UK, to build out Bitcoin ecosystem. So it's quite relevant today that we're talking about smart money and Bitcoin, so yeah.
So let's go straight on into what your definition of smart money is, Nat.
Okay, well, obviously the traditional definition of smart money is based around institutions and institutional money, central banker money coming into any kind of investment space. But I mean, really, for me, the question is what is money at this moment in time, especially when we're looking at things like digital assets and Bitcoin, which is changing the landscape of finance and institutional investment as we, see progressing over time. So I think my definition right about now is looking at where the money is coming in from and maybe what the monetary change is going to be to what will define smart money in the future.
Eilon.
well, basically it's the opposite of stupid money, if we put it this way. Institutions that are looking at investments in a different way of basically putting more value into the investment, and not just investing, based on speculation or based on, fear of missing out, if we look at this specific space.
Megan.
Okay, so I think smart money obviously is money that is able to buy low and sell high. As simple as that sounds, it's a bit complicated, more complicated for most people, but I believe smart money is visionary money. People who have a long-term vision and who can see the future coming and who are able to follow the flow of the money in that process, right? So people like Kathy Wood from ARK Invest, I know she's got a lot of flack because they're down a lot right now, but she is heavy into taking like 2 steps ahead. I believe smart money is like playing chess. They're looking to what the future is and they're positioning now regardless of the market conditions or what they will be, kind of like the Warren Buffett approach with a future vision and a view.
Jingwei.
So I have a slightly different view. So obviously coming from a traditional finance background, started my career at the Bank of England, in central banking, and then moving on to investment banking, and then consulting, and then venture capital. So I think the biggest issue for crypto right now is this zero use case. It's a solution in need of a problem. And I think when smart money coming in, that means two things. One is building institutional use case, and second is to bring that real world asset onto the blockchain. And if we look at the sheer scale of traditional finance, we look at, for example, 5 financial instruments. Let's take M1 money supply, bonds, equity, derivatives, and other post-trade heavy instruments. It's a $1,000 trillion market. And if we say 1% of that will be tokenized by 2030, that's a huge market. And that's one thing that crypto doesn't have right now, is just what are the use cases? Fine, we can build cross-chain bridge as long as we want. There's no liquidity, so what are we actually crossing? So I think the smart money is when TradFi is getting into crypto. That means the like of us, Fidelity, the like of BlackRock, Vanguard, and other asset managers and banks.
It's funny, I suppose because I've got an entrepreneurial background, I view smart money slightly differently. I've always viewed smart money as, can I bring investment in that brings talent with it? In other words, that lends its support to what I'm doing. So that's another definition of smart money, in my view. Anyway, let's dive into some questions. We've prepared a few. I'm going to start with Jingwei, which is on my notes. Here we go. In your opinion, what are the biggest impacts that digital assets will bring to your organization?
Yeah, so Fidelity was the first asset manager to get into crypto by any regulated financial tier 1 asset managers. So in 2014, Fidelity started Bitcoin mining. And in 2017, we started crypto custody and execution. And since then, we have various different funds, ETF, in Canada, US, Hong Kong, and Germany. So I think the biggest impact that we can make is that we are going to create investment portfolio. We are going to create a custodian solution that is fully regulated for the crypto crowd. I think that's the biggest impact that we're here to make. And also, as of last month, Fidelity launched a crypto trading platform in the US for retail customers. And we also launched a institutional trading platform with other tier 1 market makers in the US. So bringing a sense of real liquidity is what I think will sort of neutralize some of the volatilities in the market.
Right. Yeah, I've got that sparked an idea in my mind, but I'll come back to that in a minute. Eilon, in light of the FTX scandal, we'd be blind not to talk about that a bit. What immediate thoughts come to mind from a decision-making point of view?
Yeah, so obviously we read a lot about what happened there, and FTX was a very, very strong brand name, which I believe that was part of the reason for the hype. If you've been to Miami, you've probably seen the FTX arena. So when you look at things like that, and obviously big investment funds, we're looking at the supposedly success, and had a look at the market, which is evolving, and everything seems very trustful. And once something like that pops in such a way, which takes us back to Mt. Gox, obviously. So you kind of think of if such a big platform, which is connected to so many subsidiaries, collapse. So what can we trust? Where is the future of crypto, of investments, and so on? So now you mentioned that Fidelity started an institutional exchange, right? So sometimes you need to know where you should focus on your investments and where you should put your funds, because things like that basically take the market a few years back, even though it evolves very quickly. It's basically a disaster. So right now, as far as I can see, the only way to move forward is by regulators to jump in and take control of the jungle and make some order. Otherwise, it will happen again and again, and you know, people will just lose trust of the entire industry, and that's how I see it.
Okay, well, what sparked my idea for you, Nat, is there's been a lot of talk about, you know, not your keys and not your coin, and therefore there's been a little bit of a clamour for removal of your own coin from a centralized exchange, which leads you to then going, okay, well, that puts you onto your own hard wallet and all that kind of stuff. Well, how do you think people will cope with that, given the UX, UI experience for most normal people is probably quite beyond them?
Well, I think this has always been an issue. I think ever since like Bitcoin, let's say, was out there in the wider world, it's always been an issue for people to be able to learn how to use the technology. And I think that what we've seen progressively over these different bull runs is that more and more retail investors, more and more regular people are coming into the space, and they're kind of not getting the news of what the space is really about at all. Right, so they come in, let's say 2017, it was ICOs, we can make some money, right? They come in 2020, 2021, NFTs, we can make some money. Nobody's thinking about, okay, well, this is what the actual change is here. This is what we actually started to do in the first place. Nobody's thinking about decentralization. Nobody's thinking about what the change is actually bringing about. So people, you know, always want ease of use, less friction, right? How can we get involved as quickly as possible? And attention spans are becoming shorter and shorter and shorter over time because of social media, I would say. But I think that it is a real key thing, and I know, James, you know me as an educator, I came in educating people just on how to set up a Bitcoin wallet, and I still do it up to today, because most people do not even understand what this space is about at all. And this is what causes these kind of, shall we say, bubble effects within the market, because you've got a lot of and now what seems to happen is a lot of institutions are also coming in on the same kind of hype and not realizing that this underlying technology needs to be treated with care, and we've got still a long way to go in terms of things like UI, UX, and user-facing experiences. So yeah, that would be my general take on it. Yeah, definitely.
Yeah, I mean, it's interesting because obviously, you know, the basis of me founding Crypto AM in the first place was education. It was bringing the world of TradFi to our world, so to speak, and vice versa. And I always found myself saying, you know, we need to educate the grown-ups in the room. The trouble is that I think that back in those days, you know, advisors, obviously I'm an advisor, but I'm talking about professional advisors, just saw a money-making opportunity. And you know, our industry is so youthful. And it does beg the question, doesn't it, you know, with a 30-year-old billionaire and all the rest of it, you know, who actually was pulling the strings? And there's a lot of talk about that. But, you know, again, you talked about regulation, Eilon. Again, this has been a continuing flow of discussion, and it will always be a discussion. And unregulated business are always going to bring bad actors in. But I think that, as you say, education is the fundamental. And also those who are slow and steady and don't rush. All of the guys that, you know, rushed and broke stuff and fixed it have all sort of disappeared by the wayside. So I think that's something to also take away. The industry will survive and it'll thrive, but the people who will thrive are the ones who actually are aware. So that brings me to my other question, which is, what do you think, Megan, is going to be the catalyst, the key catalyst for the next bull run?
Yeah, I'm going to get to that point, but first I want to touch on what you said about slow and steady. This is so important. You know, I always say slow and steady with a sense of urgency, which is funny because, you know, that implies moving quickly, but no, the urgent part is with this great power comes great responsibility. And so that's why I'm also heavy into education, because we can't just rush into this and expect for everybody to get it immediately. I mean, there's such a disconnect between the inner Web3 world, the high-end investing world and, retail and what people see on the outside. So education is a huge thing. And I'll tell you a quick story. One of the high net worth individuals I consult for, he has bodyguards. I mean, he's very high net worth. He takes security in real life, we'll call it, very seriously. And I remember a conversation I had with him and said, hey, you need to sell everything you have on Robinhood because that's just an IOU note. You can't transfer it out. B, you got to get your money off the exchanges and let's get it onto a hardware wallet. And he said, oh, no, it's fine there. It's fine there. Everybody does it. They're huge. It's going to be all right. And I think you and I have fundamentally different views on security. And it made me laugh. It's like, here's this massive, wealthy guy, made all his money in stocks and the stock market. So he's from, the traditional finance. And they all trusted the system. They all do trust the system because it's too big to fail. And this is the year of that would never happen. But it does. And sticking to my principles since I got into Bitcoin of not your keys, not your crypto, the basics, right, has really saved me from a lot of exposure to these risky kind of like centralized entities. We can't avoid it because it is the on-ramp. But I think the future is decentralization for exchanges and not custodying people's assets. So yeah, I sit down and I help them all set up their ledgers. I help them go through the steps, and it's an arduous process, but like you said, slow and steady. So I truly believe that. And what will be the catalyst for the next bull run? So one of the people who I really admire and have talked to a lot, and he was at the last conference with me, is Kevin O'Leary. Now, he happened to be the head spokesperson for FTX, right? So he's in a lot of hot water now and a lot of trouble. He's smart money, many would consider, and he got involved in this. It happens to the best of them. He was involved in FTX. I mean, people put their faith in people in the system instead of the code. So where do we find somewhere in between? And one of the things that he says is that stable coins need to be the first thing to be regulated. But was this all spun up for the regulators to step in and over-regulate? We don't want DeFi to be stifled either. We don't want innovation to be stifled. So I think that the next big wave is going to come. Those institutional investors, the sovereign wealth that doesn't dare take their space here and start investing because there's no regulation, has to start with stable coins, right? And what you were saying earlier about institutions, I think people like Jamie Dimon and the SWIFT system and the ones that make all of their money on these transfers, it's going to become obsolete and they're going to be in real trouble. So I think there are so many real use cases for crypto. The problem, that, like you said, is liquidity. So when will the liquidity come? One of the things Kevin O'Leary says is there's oil barons in the UAE, people making $250 million a day that have zero exposure to crypto because of lack of regulation. So how I see this going is at least it'll start with a stablecoin bill where people can understand that those stable coins they have in reserves are backed one-to-one. Then the institutions and the sovereign wealth can start coming in, and then we'll see more liquidity in order to grow and mature as a space. And when that happens, the floodgates are going to open up, right?
Well, I think, again, I mean, we're getting to the last few minutes of the discussion, but I think that regulation and all that goes with it was the preventative measure of institutions coming in 4 years ago, because obviously they didn't have the mandate to invest clients' funds into something that wasn't. We've seen the race, as it were, to regulation. I've been a long sort of banger on the door in my country of FCA, talk to the Bank of England, talk to the Treasury, please, and do some joined up thinking. But actually, ironically, with the benefit of hindsight, they have been slow and steady. But when DeFi exploded, the pace of things, it's rather like trying to keep up with the syllabus that, if you're studying in a university, it's going to last 4 years. Well, by the end of your 4-year course, everything that you've learned is probably obsolete. It's the same for regulators. So you've got to have basic principles that apply, that don't stifle. And I think one example that I've experienced firsthand is actually the powers that be in Dubai, funny enough, who I suppose through the accident of COVID, and keeping their doors open suddenly became a bit of a mecca for our industry. And they're actually doing it the right way, I think, and they're actually consulting the industry to make sure that the regulations that they bring in are fit for purpose. And a lot of the other countries that have been chasing regulation down seem to have been sort of stuck in the 20-year-old, playbook of regulation, rather than ripping it up and starting it again. So I think a lot of people are learning and communicating with one another, and I know that the advisors to the Dubai government, including one of the big four, they're really taking it very seriously. So I suppose watch this space, but I think there is a strong future for our industry, provided we all get it right and get rid of the bad actors, which tend to get rid of themselves. But anyway, is there any final points that anyone like to make?
I mean, just from my view, sorry, just going back on that last
Everyone
one.
will get a chance, so just
yeah, definitely, just literally 30 seconds. My view is literally that Bitcoin DeFi is the future, right? Building out on Bitcoin. This was always the start of things. This was the natural progression of things. This is why I got involved with the Stacks blockchain, only SEC recognized token in the whole game, and building out on Bitcoin. So that's why I think the future is for that. And that's why I think the next bull run will be.
I want to say that the future is in the utility and not the speculation. If we take the speculation outside and so obviously be able to take out all the bad actors, I believe that the future is within the Web3 and the metaverse, and to be actually able to use the blockchain and tokenize everything, basically, not things that you don't need to tokenize, but things that can actually help everyone, like for example the logistics and the food chain and the supply. This can actually contribute and make good use cases that are not there just to find something to do with the blockchain.
Megan?
Just closing statements, just really quickly. I believe that also, like you said, utility, but there already is amazing utility. I just did a Twitter Spaces for 2 hours before coming here about all the NFT utility that there is in the market, but the real world, they don't understand it yet. So we need to find a way to find a middle ground, to connect with them, to connect with regulators, and put this all together to make this third iteration of the internet, Web3, come to life and come to fruition in a practical way.
Jingwei.
Yeah, so we're out of time. So I'm going to, instead of predicting the future, I will ask 2 questions. One is that, would you trust yourself custody with the Ledger wallet and then end up losing a USB stick? Or would you trust the like of JP Morgan and HSBC to manage the crypto custody on your behalf? That's the first question. Second question, are you a day trader? If you're not, then why are you trading on crypto exchanges? That's, in a way, that's day trading. I believe the future is on investment portfolio are 2 things. One is managed portfolio, embed digital asset into an ETF, index fund. Second of all, you get staking rewards as part of that ETF. And that legitimizes the asset class because you bring a passive yield onto the blockchain. So I think I'm a firm believer of proof-of-stake tokens. And I think, well, if I can ask a third question.
Now we are out of time.
Okay, sorry. So blockchain does not equal to distributed ledger. Blockchain is a form of DLT. There's hash graph as well. There's tons of other innovations that's captured under DLT. And I think we need to look beyond, blockchain, crypto. The game that we are trying to play here is distributed ledger technology. We are investing in the infrastructure that powers that.
Good. On that tender note, 1 minute 33 over. Sorry, Wes. Thank you very much, everyone, for being here. And thank you all to the panelists. Let's give them a good round of applause. Thank you.